You need to take an earlier order on a different entity which seems to be linked to the Subhash Chandra Group to put it on the table and present it before the court. So we'll talk more about that, but we've hit the opening bell and it's a 50-point decline to begin with, pretty much in sync with what the SGX Nifty was telling us. So where's the pressure coming in from? Aisha, by the way, is off to a flying start, 5% up. So that's the big mover on the way up. But in terms of pressure, stocks on the lower side, JSW Steel, Hindalco, we've been talking about this meltdown in global metal prices that's still weighing on some of these names. Asian Paints is cooling off after yesterday's big rally post numbers. Divi's is down about 1.5%. L&T is still struggling, another 0.5% lower over there. TCS, Infosys, Reliance, your big boys are starting out on a lackluster note, slightly weak, if one could say at this point in time. Sun Pharma is also slightly lower. Dr. Reddy's is seeing some more pain after yesterday's 7% decline. So these are your major names. But the one big trend that's immediately coming to light is more pressure on metals, follow through on the downside from yesterday. And L&T and Dr. Reddy's, again, more follow through on the downside as the day opens out. Now let's talk about the better half of the screen. iShares is up 5.5%, roaring away on those good numbers. Britannia's on the upside. Tata Motors is positive ahead of its numbers today. There's a little bit of buying on M&M and Bajaj Auto and even Maruti. Okay, so clear trend Friday morning. You're perhaps off to the long weekend, is it? Because it's the auto stocks that are really taking it away. Two-wheelers, four-wheelers, across the board buying in auto. And ONGC, there's some talk about them hitting more discoveries. So ONGC is also looking slightly positive. That's how things are starting. I'm just pulling up Z because we were discussing this as the market opened out. 6% down on that stock. Uncertainty over the Sony merger. More details on what exactly happened in just a bit. But Nigel, what are you looking at?
Let's focus on a couple of stocks that are doing well. South Indian Bank, well, the management sounded extremely confident. They're talking about mid-teens growth in terms of the loan book, as well as NIMs at around 3.5%. And positive commentary on asset quality as well. So that stock's up 8.5%. Intellect Design, last few quarters have been quite subdued. They bounced back. Margins as well have achieved what they were looking out for. So that stock, in fact, is up close to around 5% as we speak. Sona BLW Precision, the flow is moving to them. So that's why that stock as well has opened up in the green. BLS International, where it opened up in the green, but it's slipped into the red now as we speak. So that's another stock on our radar. Vodafone Idea, the stock is down close to around 2% in pre-open itself. From the FNO names, well, stocks that are moving around, you have Sambandhana Motherson, which is up close to around 1.2%, and NCC as well is up close to around 1%, and Interglobe Aviation is just moving one way. That's northward. It's up close to around 1% odd, and that stock has been really moving from strength to strength. Prashant, what else?
You know, I want to put out the MSCI names, right? And that's basically where a lot of the action is. Look at Max Healthcare. I mean, actually, we'll put this as stock stacks, 3 at a time, but maybe intradays for now. Max Health is up 4.5%. It's coming up with a lot of volumes. Sona, BLW, Sonacom, that's up 3.5% as well. Both are going to be included in the MSCI India Standard Index. And HAL is the other one which comes into the index as well. So Hindustan Aeronautics will come up on your screen. There are exclusions as well. There is Indus Tower, which I think we highlighted. Adani Transmission and Adani Total Gas are the others which are getting excluded as well. And I think those should come up on your screen as well. Nimesh has been highlighting some of these names. I mean, actually, Sona Comstar was on his chatter list yesterday on the inclusion side. Not many were expecting, some were, and he had that on his list. So that's up about 3.5%. Now, what else, right? So, iShares, of course, is the big one. Zensar is up 3.6%. So, Rima highlighted the numbers, which seem to be good. Newland was up 20%, was limit up. It's up another 3% right now. South Indian Bank, we just had the management, good set of results. It's up 8.5%, coming up with volumes. By the way, right out of the gates, volumes are not a problem. A lot of volumes. You got Intellect Design, which on a quarter-on-quarter basis has reported a very good set of earnings. It's up 5.5%, almost 500 on Intellect Design. There is Kirloskar Brothers, which is up about 7.5%. Solid volumes. BSC, Bombay Stock Exchange, is up 2%. Ujjivan Small Finance Bank, and you'll hear from the management in a bit from now, that's starting at about 30-31 rupees, and that is higher as well. On the downside, L&T is down another 1.25%. So after results, markets unhappy, stocks lower. Rail infrastructure stocks rebounded yesterday, but they're down. RVNL at least is down 3% on super volumes. I mean, volumes up or down are, again, very strong on these names, RVNL in particular. Hindalco lost 3.5% yesterday. It's another 2%, 2.5% down now. So 411 on Hindalco. Deepak Nitrite, 1.6%. I think there are earnings cuts to full year FY24 estimates after earnings for Deepak Nitrite, 1895 on that one. And there is Divi's Laboratories, which is coming up with losses once again. JSW Steel is down 2, SAIL is down about 2. Lots of these names coming up with cuts. Shree Cements, Adani Transmission, Indian Hotels, and so on and so forth. So it's a market of stocks, and that's where all of the action is. 46 points lower, 18,250 is where we find ourselves at the index level. Now, market master of the day is Pankaj Tibrewal, fund manager equity at Kotak Mutual Fund. Pankaj, good to have you with us here, always on CNBC-TV18. Appreciate your time. So, I mean, you look at numbers very, very closely, and as they say, right, in the second half, some of the weaker numbers start to come through. Whether it's by design or accident, we don't know. But as the earnings season progresses, the beats keep decreasing, the misses keep increasing. Are you seeing that? And what's the overall trajectory so far?
Good morning, Prashant. It's very interesting to see the results season spanning out. We are almost halfway through. And let's decode the numbers which has been reported till yesterday. In the NSE 500 companies, about 214 companies have reported their results. 56 are BFSI companies and 158 are non-BFSI company. And some interesting trends are to be watched out. On the BFSI side, we have seen 14% earning growth. And on the non-BFSI side, we have seen degrowth of 3%. And the headline number is about 4% earnings growth on an aggregate basis. Compared to the first 9 months, I think you are seeing moderation on the banking and the financial results. This number in the first 9 months was about 35 to 40% earnings growth, which is now about 14% earnings growth. On the non-BFSI side, we are seeing margins starting to improve as the commodity headwinds are behind us, and we are seeing cooling of commodity prices, and hence you are seeing margin recovery. And in the first 9 months, non-BFSI segment, which is the large portion of NSE 500 companies, was negative 11%. We are seeing in the first, half almost where half of the reported numbers are there, we are seeing that at negative 3%. So clearly, quarter on quarter, you have seen margin recovery, and that's showing on the NSE 500 companies. On the Nifty, I think 31 companies have reported till day before yesterday. And the numbers are about 7.5% earnings growth on a headline basis. Metals and oil and gas have been a spoil sport. BFSI again has led the show with a strong earnings momentum.
Wow, that's a feast of numbers, Ravi, right? So,
absolutely, that's really the entire dashboard, so to speak. So, Pankaj, translate this into so how you're approaching the portfolio. Not that the approach will change every quarter with the season, but is there anything else that that you're incrementally changing in terms of the approach?
Surbi, one sector which has probably stood out overall has been pharma. There have been more beats compared to the misses which we have seen in the last 5-6 quarters. And if you also look at in the last 20 years, the pharma profitability pool as an overall profit pool is one of its lowest. So we believe that with increment changes being positive on the US front, domestic doing well, pharma could be a dark horse as you move into FY24. And some of the results, maybe early days, are indicating that worst may be behind in terms of earnings for the pharma sector. On the banking side, I think the earnings upgrade cycle has stalled. And that's what the reflection is in this quarter, that earnings upgrade cycle is not there. However, valuations continue to remain comfortable. And probably this year, the stock return should reflect the earnings growth rather than any PE expansion. On the capital goods side, I think the results have been quite good, and especially on the domestic-facing companies. And we have seen strong order momentum by most of the capital good names which have reported. And that gives us the conviction of our overall call on the manufacturing infrastructure and manufacturing and the capital goods sector. Coming on to, I think, consumption, I think FMCG has shown some kind of resilience this quarter, though there has been dispersion in the names, but many managements are calling out for bottoming out on the rural demand. And I think that's something very interesting after many quarters. And also on the margin side, we have seen gross margin recovery by most of the FMCG players. So that could also be an interesting sector to watch out. And don't forget, next year, same time around, we would have our general elections. And historically, we have seen that 6 months before the election and 6 months after the election, FMCG is one sector which probably does well from an earnings standpoint of view. Also, on the discretionary and home improvement, though there has been dispersion again in the sector, we are seeing early signs of recovery, and probably the worst of the margin pressures could be behind them. And starting June and September quarter, you should see some recovery. Last but not the least, I think IT sector is an interesting sector to watch out. Almost 15 to 18 months have gone by where this sector has underperformed. Valuations for the large caps probably are in average of 10-year average, and mid caps may be slightly at a premium still. But we believe that worst probably on earnings should be behind. Probably one more quarter in September quarter, but markets are smarter than all of us. They kind of bake in slightly ahead of the bottoming out. And this is one sector we are keeping a close watch, because to refresh everybody, I think this sector has been the biggest wealth creator over the last 2 decades. And the profit pool to overall profit pool is about 9%. In COVID times, we have seen IT sector profit contribution has moved up to 14-15%. From there, we are down to 9%. And probably at some point of time, it will warrant a look. And probably we'll look from an overall perspective.
All right. Hi, Pankaj. You briefly mentioned elections and the general elections. What about the state elections? Do you think it will be a one-day reaction wonder, or do you think the market will read through if in case the current ruling government doesn't hold its ground in Karnataka?
So we have seen, Nigel, that elections are a short-term phenomena. And over the longer periods of time, it's the corporate performance, reforms, continuity, which plays a major role. I think if any disappointment is there and markets kind of correct, I think it will be an opportunity. And we believe that 18 months have gone by where markets have given no return. And it's a good, healthy phase where after a very strong up move, we have seen consolidation. I think if market gives you that opportunity, I think we should look to increase our equity exposure over the next 6 months. It could be a domestic event, it could be a global event. But my sense is that over the next 2 quarters, earnings should bottom out. From September quarter onwards, we should start seeing earnings upgrade momentum starting off, because a lot of companies will see low base and margins probably worst is behind us. Only thing we should keep in mind that this year would be a year of top line miss. Don't forget that last 2 years we were supported by the healthy WPI inflation. Now WPI inflation is down to below 2%. So the corporates won't have that lever from a top line growth perspective. And probably most of the street analysts are expecting a linear growth in top line for most of the corporates. Our worry is that that could be one point we should be a little wary of, because inflation is missing, and if volume growth doesn't pick up, there could be some kind of a disappointment on the top line side.
Pankaj, you did mention capital goods is one of the sectors, where you're seeing positive traction. And if I remember correctly, I think as a house, Kotak has always had a favorable view on the capex cycle plays, cement, and the related spaces. But just your thoughts. I know you won't talk individual stocks, but I'm asking more from the point of view of maybe a signal for the sector. I mean, this whole sort of debate around L&T, we saw what happened to the stock yesterday. Margins coming under pressure, and one of the experts that I was speaking to raised a very valid point, saying when you're in an upcycle, when there's a huge amount of tendering and contracts being given out, if then you can't command good margins, then when will it ever happen? I thought that was it was a strong point of debate. But just your thoughts on capital goods. And you have companies like Siemens, ABB, the industrial automation part of it, where the numbers at least seem to be far better. So how are you looking to play it?
So, Surabhi, if you look at margins are the last to recover in a capital goods cycle. What margins you are seeing are the orders which were taken a couple of years back, and they are getting executed now. And also don't forget that there was a huge headwind of commodities in the last 18 to 24 months. What happens in a capital goods cycle is that when the economy starts recovering, you first intake a lot of orders. And once your order book is full, and the book-to-bill ratio is 2.5, 3 times, and you have enough visibility for the next few years, you become very selective on the order booking. And then you try and choose high margin orders versus low margin orders. So generally, it's that first, the parameter to track capital goods is look at the order inflows. Is it getting very strong? The second is followed by the top line growth. And finally, the margins, which kind of come in at a later stage in the cycle. I believe that the order inflow growth for most of the companies have been very strong, and the commentary and outlook also remains to be strong. I think it will be followed by a strong top line growth this year, and margins will be probably towards the latter half of this year or early part of next year. So I'm not, or we are not too concerned about a miss in margins in a couple of names, but the broader commentary and trajectory remains to be still strong.
Okay, got that. Pankaj, a pleasure listening to you as always. Thank you very much for joining us today on the show. You have a good weekend, and we look forward to our next conversation. Okay, with that, it is time to move on with the update that the market's down 90 points, by the way. So the bears are having their way, 18,200, and that's the picture on the screen so far. But we are going to keep it with corporate conversations on this leg of the show. And Dixon Technologies was conferred with the Most Promising Company of the Year award at the India Business Leader Awards last evening. Atul Lal, MD at Dixon Tech, is with us now to talk about the business momentum, the outlook for the sector. Mr. Lal, first of all, many congratulations. We didn't miss you at the ceremony last evening, but many congratulations on the accomplishments. And I'll start with that first basic question, right? I think the awards are also a celebration of the story and everything that you and your people at Dixon have come to achieve. But just in the near term, the going has been a little more challenging. I'm harking back to the last quarter, concerns on demand. You tell us, we're in a brand new financial year. What's your look ahead?
So thanks very much for the award. It's really heartening for all the 20,000 Dixonites. And before I respond to this, to your question on the current business scenario, I would also like to share that in our last 5 years journey, we have grown 4.5x in our revenues, 4.3x in our profitability. We have grown 4x in our number of people, 2x in our number of businesses. So it's been an interesting, very, very encouraging journey for each and every Dixonite. And we really thank CNBC for this award. Extremely sorry we're not there, but really thanks for recognizing this effort by each Dixonite. On the current scenario, yes, we have had
Yes, Mr. Lal.
We've had a challenge in last quarter, but please be rest assured the company is on a aggressive growth path, and we are closing on some of the large contracts in very, very, very near future. So please be rest assured that the kind of growth we have had is going to be sustained. A quarter here and there is only a blip. So the situation is going to be extremely positive. Yeah.
Right. Mr. Lal, good morning. Prashant here, and congratulations once again on that
Thank
award.
you so
And, missed you yesterday at the ceremony, but good to speak with you this morning.
Extremely sorry. Yeah.
No, absolutely no. Mr. Lal, could you tell us, do you have some, would you be able to share what FY24 numbers will look like broadly? Even if you're able to give us a range, because that'll be helpful for, investors who are watching. The last time you joined, we got a sense that the guidance, it's kind of tough to give the guidance at that point, but you did indicate that maybe a month, 2 months into the year, you'll have better clarity. Would you be able to do that?
Prashant, I appreciate your keenness to know some kind of number guidance, but I'm in the silent period. I'm not in a position to share the numbers.
All right.
Rest assured, the growth is going to be decent, much ahead of what industry growth is. It's going to be on the same line that we have had earlier. Please appreciate that we have had a CAGR in a revenue growth of more than 38% in 5 years, last 5 years. Yeah.
Hi, good morning, Mr. Lal. This is Nigel on this side. So we'll wait by for that official guidance on FY24. And last year was a bit of a tough year with scaling back of that guidance. So let's hold on to the near-term guidance. But as you said, last few years, you have moved from what? 3,000 crores of revenues, and hopefully you'll end this year between the 12 to around 13,000 crores odd. For the next 4-5 years, let's talk a longer term horizon, 2027 odd. What do you think this number could be? From around these 12, 13,000 crores, where do you see the company headed in terms of revenues?
So undoubtedly, there is a very significant inflection point in electronic manufacturing industry in India, not only servicing the domestic market, but also the global markets. So doubling or at least taking it by 70-80% from the current level is very much possible. And that's what we are working for, aspiring for, and the opportunity is definitely there for that. Yeah.
So you'll be at least at if I talk about a 70%, an 80% increase from here, you should be mid 20,000 odd from here?
That's right. We're confident about it. Yeah.
By 2027?
That's right.
Okay, got that, Mr. Lal. A lot of the products that you manufacture, they directly tie in with the end consumer discretionary demand, right? Whether it's mobile phones, it's consumer electronics. So give us a sense, when you talk to your customers, your clients, is there any slowdown or cutbacks at all because of the environment that we are in? Or is it still firing on all cylinders? And in the same light, I also want to understand what capacity utilization levels you're operating at and how you expect to see utilization levels throughout this year.
So in our case, undoubtedly, the consumer demand, because what we manufacture for our customers, the brand owners, is an important element. But equally important element is that what is the share of wallet of our existing customers we are going to have, and also the new customer acquisition. So I find that in our mobile business, the order book looks good, very good. Home appliances is good. Lighting and mobiles, I would say, lighting and televisions, I find it slightly slow. Wearables and wearables is booming. We have added capacities. We have moved from 1 million devices per month, and now we're going to be ready with almost 2.5 to 3 million devices a month. Telecom devices that we do for Airtel, who's our anchor customer, that is the routers, that's in a boom period. So that's the kind of scenario we're having at present.
Lighting, you said lighting, and which other category is a little slow?
Lighting and televisions.
Lighting and televisions. And just capacity utilization levels at present, I mean, across your plants?
So lighting would be somewhere around 70%. Television, please appreciate, is a seasonal business. The production requirements are mainly around the festive period. So it's around 60-65%.
Mr. Lal, the big one is mobiles, right? And I think the last time we spoke, you said that, I mean, actually, we have the data for the fourth quarter, and mobile shipments were the slowest on record in fourth quarter. I mean, global mobile shipments. So there was a bit of a slowdown there. Has that improved in the first quarter, and what kind of trends are you seeing there?
So undoubtedly, the mobile volumes had declined even in India. But when I talk to our customers, the sense one is getting is that the inventory in the channel is getting corrected. And the coming quarter looks much better. That's what the sense I'm getting.
All right, Mr. Lal, just to come back in terms of a broader number, by 2027, you said, somewhere around mid 20,000 crores odd is what you could head to. So I'm just working with an 80% number from a base of around 13,000 crores. You'll be in that vicinity of around 23 to 24,000 crores, which is a number, right, that you will be looking at by 2027. My question to you is, how much capex do you need to put to get to that number? Because with the current facility, there would be a particular revenue potential, but to get to this 24,000 crores, what kind of capex you have to incur, and also the targeted margins. You have been in this vicinity of around 4-5% or thereabouts. Do you have a targeted margin going ahead because of the product mix that you're going to be changing, as you were mentioning?
So the capex intensity, we've just come out of our budget meetings for the current fiscal. We feel is going to be around 400 crores a year.
Okay.
And please appreciate growth is happening with an extremely healthy balance sheet and practically no debt. So this growth is happening with this kind of capital intensity. And we feel that in spite of this capex, we're going to be generating cash after capex year on year.
So that would be enough to take you to that 24,000 crores.
That's right.
And very quickly, the targeted margin in the next 4 or 5 years?
So the targeted margin is going to be somewhere between 4 to 4.5% because the main growth is coming from mobile, which is largely a low margin business.
Okay, just quick final word, another final number, Mr. Lal. PLI, I think you received about 150 crores in March. This year, FY24, what kind of inputs are you expecting from the production-linked incentive scheme?
So we are a PLI beneficiary under 5 schemes: mobile, IT products, telecom devices, lighting components, and air conditioning components. And our account up to December 22, we really want to thank the government. We're the first and the only company whose account has been completely cleared in December 22. And our applications till March are in the process of getting finalized. And I think it's becoming seamless now. On all the other PLIs, we have achieved the thresholds both on investment and the revenues. And we're confident of achieving those targets in the current year. So we are a large beneficiary of the PLI domain.
Okay, I know you can't talk numbers, silent period, so maybe after the Q4 print, we'll get down to some more specifics. But thank you very much for joining in and giving us a lot of the, the overall color on the business and the outlook going ahead. Thanks for joining in. That is Dixon Technologies. We need to take a very quick break. On the other side, Itara Davis of Ujjivan Small Financial Bank will join in to talk about their earnings print. We'll also connect with Mr. Om Manchanda of Dr. Lal PathLabs, discuss earnings with them.
Welcome back. This is Corporate Radar. Well, as promised, let's get chatting with Ujjivan Small Finance Bank. That's the next corporate on our radar. It was a good quarter of the bank as the net profit for the quarter came above what the street was estimating, and the asset quality as well has reduced a little bit. Mr. Itara Davis, the MD and CEO of the bank, joins us on the show. Hi, sir. Morning. Thanks so much for joining in. Well, how's FY24 shaping up? If you could give us a few numbers. what will the NIMs look like? Because it's come down a little bit, but I think you had guided for that. So what's the broad range we look at out there? What kind of loan growth are we looking at, as well as give us an insight into asset quality?
Good morning, Nigel. It's good to be back with CNBC. Yeah, I think, we have come out with record results for 2023. And, it's an all-round performance. So you're talking about 24. We expect to continue that growth trajectory that we have seen. In terms of NIM, the NIM came under a little bit of pressure in the fourth quarter. We expect NIM to be around the fourth quarter levels into the first half of the new financial year. But based on an expectation that the interest rate cycle will change towards the second half, we can see NIM beginning to grow. But the other part that you need to keep in mind, and your viewers need to keep in mind, is that our non-interest income is also seeing a big growth. And that will more than compensate for any pressure on NIM. And I think that is something that everybody needs to, NIM is very important, but in addition to NIM, non-funds-based business is also very important.
Mr. Davis, hi, good morning. So let's just talk about the business growth, because the disbursals number is very strong. I mean, even quarter on quarter, I think it's up 23-24% year on year, again in the 20s. So what is the trajectory like for the current year? FY24, by how much do you think you'll be able to grow the book?
Now, the overall OSP is expected to grow by about 25% plus, and we will keep giving better guidance as we go through the year. But for the moment, in the first quarter, we are saying 25% plus. So that is the direction. The disbursements, obviously, for us, with a bit of, it's slightly different in each quarter. The first quarter tends to be a slow quarter, and the fourth quarter is, or in all means, the best quarter. And that's why you have seen disbursements in the fourth quarter crossing 6,000. For the full year, disbursements were crossed 20,000, which both of them are records. In the first quarter, we will expect to see about 4,800 crores of disbursements is what we are expecting. And that will keep picking up as we go into the second, third, and fourth quarters.
Right. The disbursements in the MFI business it's a strong quarter, right, traditionally, sir? Could you tell us what's happening there? Yeah.
The MFI business, when we came back from the COVID situation, the MFI business is the one which took off. And they did extremely well. They've done, a fantastic job this year in 23. Into 24, we are seeing the next part of our business also coming into gear. The housing business will be doing a fantastic job this year. The housing team did a lot of homework in the last year, put things in place. We have got a new structure in the field. We have got asset centers distributed across the country. And that is a center where there is a full team, not only of the business, legal, and all the other support units are there. So they will be able to speed up and increase disbursements. And we see a lot of demand coming from the affordable housing sector. So this year, our growth engine is going to be, in addition to the micro banking loans, it's going to be also the housing.
Okay, all right. Just a quick last word on asset quality. Mr. Davis, you managed to reduce your gross NPAs, I think, to sub 3% now. What's the outlook on provisions and overall the health of the book?
The collections have been going very well, 100% in the last couple of months. We expect that to grow, to continue. And, we can expect the overall provisioning levels and everything else will be around the 100 basis points for the year, which will be slightly higher than the previous year, but nothing, much different. We are expecting the collections and to continue. And if that continues in the way the previous year, last quarter, the fourth quarter, I think even the numbers will be slightly lower. So an excellent situation in the collections and in GNPA and NPA reductions.
Okay, we'll leave it there. Thank you very much, sir. Appreciate you joining in with that perspective on the business, and good luck. We'll speak with you soon again. Well, the market is at the lowest point of the day. We are at 18,211. I mean, more than the index, which of course was starting lower by 50-60 points. It's added on a little bit more. the market breadth is also completely flipped. So the broader markets are now in the red. 1,150 stocks are lower and 800 stocks are higher. Now, Dr. Lal PathLabs also reported numbers. Weak quarterly performance from the company. Revenues were subdued. Profits dipped in double digits. Margins contracted as well. But what's the outlook as we start another new financial year? Om Manchanda is Managing Director at Dr. Lal PathLabs. He's joining us now to take questions. Mr. Manchanda, great to have you with us here. Good morning. Thanks very much, Prashant, this side. So I want to start exactly there with, would you like to give out a explicit top-line guidance for FY24? Also, I mean, that will be most helpful. Go on.
Good morning. So I think all I can say right now is that we are entering FY24 on a positive note. FY23 was one of the difficult years, not only for the company, but for entire industry, because COVID revenues fell very sharply to the extent of 85-90%. And that put the entire industry in a bit of financial sort of management stress, because it was very difficult to pull back all the cost. But I think I'm happy to say that that's behind us. Now we are entering FY24 on a much more positive note. We have a smoother sort of baseline. And competitive intensity also in the business actually has somewhat reduced what we saw probably a year back. I think overall we are entering FY24 on a very positive note.
Mr. Manchanda, did non-COVID revenues, so COVID revenues fell, and that's understandable, but it's not possible to bring down costs related to that at the same level or the same pace. But it'll happen in FY24 is what you're telling us. But non-COVID revenues also remain sluggish. Could you tell us in the fourth quarter, did you see a decline as compared to the previous quarter for that segment?
For non-COVID, you mean?
Yes.
Yeah, I think for the last couple of years, we've been seeing a very flattish pattern between Q3 and Q4. Q3 used to be earlier a weaker quarter, but last couple of years, I'm noticing that our Q1, Q3, and Q4 are very similar quarters. So I'm really not perturbed about that. But overall, I think Q4, if you look at standalone, our non-COVID growths are fairly okay. And also, one must see that last 2-3 years, one has not been able to take a price increase. For the first time, we took price increase in the month of February, which is also a positive news because we didn't see much of resistance coming back from the market. So I think overall, I would say that our ability to take price increase is much better now than what we were seeing earlier.
All right, Mr. Manchanda, we noted that, and that's why I think the realization per patient went up to around 770 rupees approximately. Since that last price increase got absorbed, do you think that you'll be taking any more price increases? Where do you expect realizations to stabilize at? And also in terms of a volume growth number, some part of the sheet was expecting a little bit a higher number in quarter 4. What kind of volume growth are you looking at in FY24 if you compare it with FY23?
Let me first address your observation about revenue per patient. It has definitely gone up, which is a positive news. It's not only just because of price increase, but also if you notice contribution from bundle packages, our brand name is Swasthfit, that has sharply gone up to 22%. That also has contributed to higher revenue per patient. Even though there is a mixed change also we're observing because high-end test portfolio is growing much faster. There the realizations are much higher. So all that is contributing to higher realization per patient. I think your second question is whether we'd be taking another price increase. Probably not yet. It's just began in the month of February. We would wait and watch as to how it goes. But obviously, some bit of rebalancing is already happening in terms of routine tests and high-end tests over a period of time. And we will continue to look at this area as well as we go along.
Okay, that's about the prices and volumes. What is the broad number you can guide for FY24?
Yeah, if you look at last 3-4 years CAGR, we are noticing that our average volume growth is about 8 to 9%. And I think we are hopeful that we should continue to keep that number intact. You also should see that volumes actually have two aspects. One is a patient visit. That's a number which is reported right now. But we are also seeing a very good growth in number of tests per patient, which is contributing higher sample growth. So I think there is a bit of an interplay between number of tests per patient and the number of visits. So I think overall, we are very confident of sustaining the growth that we have experienced in the past.
All right. And Swasthfit, as you mentioned, that's around 22% now. Where do you see that number headed? Because it's been growing quite well and it's, helping the overall numbers as well.
Yeah, I think it's clearly providing value to virtually every stakeholder. Even it's very easy for medical fraternity to prescribe this test, SwasthFit. It probably covers all the liver function, kidney function, and all these tests together. It's a great value for money for the patient as well, because in one go they're able to test related to many organs. And for us also, it simplifies the business operations because one tube just gets loaded on the machine and you can do all these tests. So I think market is clearly moving towards where screening packages are really gaining ground. And there's other part of the business, which is illness part, which is highly specialized part. I think I can clearly see the divide between routine tests, which is bundle, and high-end tests, which are prescribed by high-end doctors. So I'm very bullish about this whole bundle packages going forward.
What's the price of SwasthFit now for the package now?
Oh, it's actually, there are multiple price points depending on the basic going up to very high end. So I think it ranges between 800 to $4,000. So, but there are multiple price points at which we operate.
Okay, got that. Mr. Manchanda, hi, good morning. Want to get your sense on the Suburban business as well and how that's shaping up, how much contribution you're expecting. And I believe margins for Suburban were somewhere in the vicinity of 12%. Have they improved now? And that brings me to the overall picture. I mean, also give us a sense of guidance on FY24 composite blended margins for Dr. Lal PathLabs. Now that you're saying competitive intensity is reducing, can we start seeing margins get back to somewhere, close to the earlier highs?
Let me first address the Suburban piece. I think we are fairly confident of as we go into FY24 for Suburban. I think the last year was, we've achieved a couple of things. One is, of course, a transition from earlier sort of management structure to a very professional structure now. We've also launched a very big reference lab in the city of Mumbai. And overall, if you study data of Suburban last year, it had virtually 50% of turnover coming from COVID. And actually, we managed this whole transition of COVID virtually falling from 113 crore to 9 crore and pulling back cost. I think we are fairly pleased with our performance of managing EBITDA with such a high fall of COVID. And now it mimics what this business was pre-COVID times. And we know that this business didn't have very high margin compared to what we have in the parent company. But 155 crore of base, 80% of it coming from Mumbai city, I think it's a very great platform for us to go in the region of West and Mumbai.
Not at all debating that. I just want to understand what's the differential between Suburban margins and parent company margins. And going forward, when you put the two together, FY24, what's the margin outlook?
So our margin outlook is still in the range of about 24-25%. We know that Suburban is still about 12%. It is a bit dilutive, but it's all baked in the FY23 margin. So we continue to hope that FY24 will be very similar to what we have delivered last year.
Okay, all right. Mr. Lal, and full year will be around 25% margins, right?
Yeah, in that range of 25% range.
Okay, got that. Thank you very much. Appreciate you joining in. It's always a pleasure speaking with you, sir. Good luck. So that's Dr. Lal PathLabs with perspective on what the future holds for them. Well, we'll take what we'll do is we'll address the markets now, which is, by the way, come off sharply. I mean, just in the blink of an eye, we were down 80-85 points. There is a 30-35 point recovery which has set in since then, just in the last 5-6 minutes. Mitesh is back with us for some more sort of perspective on the trade so far and what trades he'd like you to take. Mitesh.
So, Prashant, on the index, as I said, I think, the market is still consolidating and therefore, not giving any kind of trading bias. But on stock side, I have a buy on Polycab. I think that's the stock which is broken out nicely. Buy here with a stop at about 32.50 for targets of around 3,400 plus. And the other stock which I like is Havells. After a pullback, it's making a fresh swing high. Havells is a buy with a stop at 12.80 for targets of 13.30.
Okay, got that, Mitesh. Thanks very much. By the way, look at some of these stocks fly. South Indian Bank, 10%. Ujjivan Small Finance, 4.5%. And the IT earnings reactions, both Sensar and Intellect Design Arena, some pretty smart moves on the earnings back today. Let's take it to commodities then and figure out what's moving in the market. Manisha is back with us. Manisha, what's on your radar?
I'm looking at metal prices because a very sharp decline is what we have seen in the last 24 hours in many of these. The strength in US dollar, which is back at 102, really seems to be weighing on. And then apart from that, the Chinese data is on the weaker side. The producer price inflation has come in much lower than what the street was expecting, and the lowest in last 2 years, by the way. And the Chinese demand, Chinese imports and the exports of finished metal products also seems to be on the weaker side. So I will start looking at with copper first of all, and we have seen prices decline quite sharply onto this one as well. LME copper is trading at a 4-month lows. Here as well, we have seen the inventories gain up quite strongly. I've been telling you for last many days on how we have seen the inventories at 56,000 tons, which is the lowest since 2005. So from that 56,000 tons, we have seen inventories gain up above 70,000. If LME is trading at a 4-week lows, you have COMEX prices trading at an 18-week lows right now. And as I said, the inventories have jumped up from 56,000 to almost 76,000. And this has happened in last week or so. So we are looking at higher inventories. I mean, we are much lower than if you look at a year average or a 5-year average. But at this point in time, the jump up inventories is impacting the prices. Also, when you look at the China copper imports, they declined by 12.5% for the month of April. So that means the construction, cabling demand in China also seems to be reducing. So copper is on your radar, and we've seen a very sharp decline yesterday, continues to be in the red right now as well. For copper, the Peru March copper production also gained up by 20%. So all those wage concerns, labor union strikes, all of that has ended, and we've seen the production come back. Aluminum is on your screens, and we're looking at a 7-month lows at this one. $2,060 a ton is where that one is trading. There is sharper declines that we've seen in other commodities too. The Chinese aluminum output has increased by 3.5% in the first 4 months of this year. So here as well, we are looking at higher production, higher inventories. Remember, last year as well, China aluminum production was at a record highs. So we are sitting in strong inventories onto this one. Nickel is another metal that should be on your radar. We're trading at a 7-month lows onto this one as well. 22,000 is back on LME. We did see prices gain up to 28,000 in the previous month, but that clearly has not been able to hold on. The other metal I want to talk about is zinc. Here as well, we're looking at prices at 26-month lows now. $2,600 a ton has broken on the weaker side here. For zinc as well, if you look at the Chinese output, that gained up by nearly 9% for the month of April. And all 4 months of this year, we've seen zinc output continue to gain in China, and we have seen further build-up come in there as well. So for the week, we're looking at nearly 3% of decline for zinc, 3.5% down for aluminum, nearly 5% of decline is what copper is posting for this week, and 9% of a cut coming in for nickel as well. So clearly another week which is ending in the negative for metals.
All right, Manisha, thanks very much for that. So commodities are rolling over, aren't they? Looking broadly weak. Now, just two names. Medanta is up 6.5%. I'm not sure whether there's any...